Hello everyone, this is the pre-market report video for today, May 4th in the Indian stock market in terms of Nifty and Bank Nifty. Last night, as expected, US Federal Reserve raised the interest rate by 25 basis points. Following the decision, Fed Chairman Jeremy Powell held a press conference. So, in this video, we'll discuss in detail about the key points that he addressed. I watched the entire press conference, and if anyone fancies seeing that, I'll provide the link in the description below. In essence, the entire conference can be summarized with four main questions. First, will the Fed pause or stop the interest rate hike in June? In the previous March meeting, they mentioned the possibility of only one more interest rate increase, but now, today, why they are not confirming a pause? Second, is the banking crisis over and how can it be prevented? And third, is there a possibility of a recession? Fourth and finally, what will happen if Congress doesn't raise the debt ceiling? In response to those questions, Fed Chairman provided the following answers. First, he is not certain about pausing the interest rate hike in June, but that decision will be based on the data arriving between the next 6 weeks, such as banks' credit condition data, jobs, demand and supply, and PC inflation. Here, please note, in this conference, newly he added the bank's credit tightening. So please be aware and watchful for that. The data is due to release on May 8th. Then, regarding banking crisis, Fed Chairman said that he don't want to say it's over, but he want to say like this. In the last February, they identified 3 banks as problem. Silicon Valley Bank, Signature Bank and First Republic Bank. Now all those 3 banks' problem is resolved. So he said that he can't say it won't happen again, but he thinks that everything is under control. Then some journalists asked about the possibility of recession. For that he mentioned he thinks there is no recession. At present, US unemployment rate is at 3.5%, which is 50 years lowest value. Because of this interest rate hike, that might increase slightly, and that is what he wants to see as the meaningful impact to reduce inflation. Other than that, he doesn't think there will be any recession. Then finally about the debt ceiling, he quickly stops and refrained from speculating on the consequences of Congress not raising the debt ceiling, since it's completely uncharted and unprecedented territory. And that will undermine the whole US financial superiority, and even in his dream, he never dreamt that US government failed to pay their bill. Anyway, last night throughout the conference, Fed Chairman emphasized striking a balance with interest rate hikes to control the inflation without affecting economic growth. The US economy is projected to grow by 0.9 to 1%, which is below its potential, but he said it's necessary to bring inflation back under 2%. So, as a summary, he didn't say that he's going to pause in upcoming June meeting, but everyone kind of predicted that there will be a pause. There is a one thing that he made which makes everyone worries. He said during the last quarter and year, companies posted strong results due to the limited supply, which led to the higher prices and improved profit margins. Now that supply has significantly improved and credit has tightened. So he believes that the prices will decrease, consequently causing a decline in companies' profit margins. Anyway, last night S&P 500, which had been trading in the green until the press conference, but during the press conference and after that, it turns negative and closed negative. At the end, Dow Jones down by 0.8%, S&P 500 lost 0.7% and Nasdaq decreased by 0.46%. Again last night, US VIX further increased over 3% and moved above 18. In terms of 10-year bond yield, it dropped another 2% and moved to 3.36%. And this rate hike with a partial Fed hawkish speech made the oil to drop another 5%. Note here, despite the OPEC's oil production cut announcement, in the last 2 days, each day oil dropped 5%. In total, together it dropped near 8%. At the time of this video, WTI crude is trading near $68 per barrel and Brent crude is trading near $72 per barrel. Coming to Indian ideas, Both the IT stocks closed over 1% negative, but banks looks okay. Then regarding SGX Nifty at 3 am Indian Standard Time, it closed at 18,115 and equating it with spot market, it's indicating only 30 to 40 points gap down opening. So that's what happened in the global market. Now let's move to the India related info. First, for the fifth straight session, FII net bought shares worth approximately 1350 crore rupees, while for the second straight session, DI turns net sellers as they net sold shares worth approximately near 580 crore rupees. This is the huge positive for the market since now FII started to buy continuously and significantly. Next, in the aftermarket house, Titan released their quarterly results. They reported a 50% increase in standalone net profit compared to same period last year. Their revenue from operations also increased over 25% compared to previous year. Overall, this results appears very positive and I expect the stock to trade positively. Second, another Tata company, Tata Chemicals recorded a 62% year-on-year growth in consolidated profit, and this was driven by a robust operating performance and strong growth in the top line products. Their consolidated revenue reached over 4,400 crore rupees for the quarter, reflecting a 26.6% increase over the year ago period. Again, I consider these results positive for the Tata Chemicals as well. However, Adani Wilmar's Q4 profit dropped by 60% due to its lower margins as edible oil prices fell. So, we may expect some pressure on that stock. Finally, one generic info. Yesterday during the market hours, S&P Global released the India's April month service payment data. The data comes as 62, which is 13-year high. It means Indian services sector expanded like crazy in April. I mean, in comparison, last March month it was just 57.8. Now this 13-year high value is the 21st consecutive month expansion. So this is very good and huge positive for overall economy. As a summary, again global momentum doesn't improve. US market closed significantly negative for the second consecutive day and so our IT stocks. At present, SGX Nifty indicating 30 to 50 points gap down opening. However, banks looks good. This service payment data, fall in oil price, US debt ceiling issue, all can bring some more foreign fund into the Indian market. Let's see. Then about the things to look out, HDFC, Hero MotoCorp, Adani Enterprises, Dabur India, Tata Power and TVS Motor are some of the major Indian companies' earnings results are scheduled to release today. And in terms of macro, during the market hours at 2:30 p.m., Europe's wholesale inflation PPI data is due. Here the expectation is around or less than 6% compared to previous month over 13%. Finally, in the aftermarket hours in the evening, European Central Bank's interest rate decision. At present, the expectation is to increase the interest rate by 25 basis points. And in the night, various US related data such as unit labor cost data, February balance sheet and usual weekly job insurance claims data. Anyway, moving on, yesterday US ADP released the April month US non-farm payroll data and it comes as 2,96,000, which is almost double with respect to the expectation. Again, this data also showing that how the US jobs market is very strong at present. Similarly, Institute of Supply Management released the US service payment data and it comes as 51.9 against expectation of 51.8. Again, this data also shows how strong the economy is. Coming to technical, after 6 positive close and 6 continuous green candles, Nifty forms small negative candle on the daily chart. Here, if we consider the last 3 days, it forms the white evening star pattern formation. So, there is a potential for further consolidation or minor weakness for the next 1 to 2 sessions before witnessing an upside bounce from higher lows. Immediate support is at 17,900 level. However, the minor lower shadow on the daily chart could indicate a lack of sharp selling participation in the market. But if it breaks 17,900, then we may assume the trend is reversed. Still, the moving average and technical indicator summary for both Nifty and Bank Nifty is indicating the strong buy signal. Regarding options open interest for Nifty, if you see the change in open interest, there were small quantity of new put options were added between 17,700 to 18,000. Whereas large quantity of new call option open interest were added at above 18,100. And 18,100 is the point where the maximum nearby new call options were added, and thus 18,100 is the immediate resistance to break. Then based on overall options open interest data, 17,900 got the maximum nearby put option open interest without significant call option open interest. So 17,900 is the support to look out for. Here 18,100 shows they got huge short straddle. Thus the next point 18,200 maximum call option open interest can act as the strong resistance for today. Then coming to Bank Nifty, based on change in open interest, small quantity of new call options added at above 43,200 and large quantity of new put options were added at specific points below 43,200. Then based on overall options open interest data, significant short straddle were present between 43,200 to 43,300. Then the maximum call option open interest is at 43,500. Thus 43,500 is the resistance to break, and the maximum put options without call option is present at 43,000. So 43,000 is the support to look out for. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the algorithm and will also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.